Good morning, everyone. It's December 11th. It's a Wednesday, and today we've got some big Fed data, theoretically, it's big Fed data. I don't really think anything is going to be new out of this report. I think the Fed is going to say, folks, we've got no more ammunition. We're not lowering rates. As a matter of fact, we may not lower rates for the entire 2020. The public and President Trump really wants the Fed to lower rates. But, we had a Friday unemployment numbers that were just amazing. They blew everything out of the water. It caused the Dow to go up over 300 points. So the case for a weaker economy, maybe global economy, but U.S. economy is strong. And I'm going to say it. I said it before at least 1,000 times, and I'm going to say it again. Fed, you made a huge mistake lowering rates where the stock market was at a 52-week high. Right now would be a really good time to do that, not back then. Anyhow, nothing from Trump and China. Investors are hopeful that no news is good news and that Trump and China are going to kick back the tariffs that are officially supposed to start on Sunday, where U.S. slaps between 160 and 180 billion dollars on China. I don't remember if it was 160 million or 180 billion. 160 or 180 billion, or it might be 170. But regardless of the number, 160 or 180, that's a lot of billions. So that's not going to go away. If anything, it'll be pushed back. If it gets pushed back, the market will just stagnate and just kind of rally one day or two. Now, if you recall, about a year ago, when we would push back these negotiations, the market would rally for 2-3 weeks on end. Now, we're lucky to get a day or two out of it. So don't expect the Fed to come and save the day. They're running out of ammunition. They really are. Now, trading action, we huffed and puffed with the economic report. We made a gap. We couldn't take out the highs. We're still trading above the 50-day line, but this gap that we saw is getting filled, and I'm expecting possibly more downside. Now, if you recall, on Monday and Friday afternoon, I told you guys that we're going to be building a congestion pattern, a hurry up and wait pattern where we wait for data to come. Right now, we're waiting for today's economic data from the Fed, and we're waiting for some resolution with China. Now, typically, no news is bad news in terms of this China, but investors are now saying, well, no news is hopeful. It means they're going to kick things into the future. I don't know what it is with me. I guess I can't speak properly before 8 o'clock in the morning Eastern time. But anyhow, I don't know what's going to happen. No one knows what's going to happen. But I'm going to tell you this. Unless something drastic happens, resolution of trade war, phase one, agreement being reached, which none of those things I believe will happen, I think the stock market is going to congest. We're going to see lower highs and higher lows, and it's going to build a triangle or a congestion type of a pattern with very little directional bias over the next few sessions, or at least a week, because there's very little direction to the market right now, especially going into the holidays, and it's too early to have a New Year's rally or a Christmas rally, and I'll get into that in a second. Russell 2000 following the S&P, actually not following the S&P. The Russell 2000 is still leading the S&P. This is very positive. It's the first time since last November. I'm going to repeat, November of last year. Look at this. Look at the all-time highs on the Russell. That's November of last year. Actually, you know what? It's not even November. That's August. That's the end of August of last year. I thought it was November. No, made a mistake there. That's why it's good to look at charts. We're talking about August of last year. And we've been just kind of humming along, going sideways. And for the first time, as you could see here, we're starting to show a little breakout. So for the first time, the Russell, the small caps, are finally starting to see the beginning, I'm going to repeat that again, the beginning of the end to the trade war. I'm not expecting miracles right now, but this is what you guys got to keep an eye out. Keep your eye out on the Russell and the S&P 500, and keep your eye out on whether or not the Russell continues to lead. In other words, makes higher highs, lead over percentage-wise over the S&P. If it will, and if it is, and it is right now, notice the Russell made higher highs here. You see right here, made higher highs, where the S&P made lower highs. So the Russell is now saying, hey, we're seeing the beginning of the end of this trade war, because they were the first ones to go down. They're more speculative. Speculative stocks tend to go down faster, but they tend to go up faster too. So again, I'm not I'm not really pleased because we don't have a resolution, but I hate to say I told you so. I was expecting this. I'm not expecting any resolution, more of this, let's push back the tariffs. That's why volatility is off the 2-year low, which is near 1112. It's near 15s, and it's hovering around there. And I think it's going to stay there till the end of the week, or till we see something, either a kickback in the tariffs, a pushback to a future time, or a potential partial resolution. I don't know. It's really getting close. Remember, the deadline is only 4 days away. Now, in terms of the inner market, the sectors, while we are seeing small caps starting to lead, that's very positive, because small caps should always lead slightly ahead of the blue chips in a bullish market environment. We're finally seeing it. But what we're not seeing, what we're not seeing is, we're not seeing sectors, the 10 S&P sectors, humming along. We're still seeing major fragmentation. Fragmentation means upside is limited and congestion is more than likely possible and foreseeable till we get this fragmentation out of the overall market. For example, what do I mean by fragmentation? Look at utilities. Utilities are the most defensive sector. Consumer discretionary is the most speculative sector, along with technology. Technology's leading, consumer discretionary is next to utilities. You got financial, everything is completely out of whack. If you were to look at this under normal circumstances, after a nice strong pullback, you would see technology and consumer discretionary stocks right next to each other. They usually are right next to each other. At the most, they'll be one apart. But typically, you'll see technology, consumer discretionary, technology. The reason you're seeing technology right now, all the way up here, is because the semiconductors have separated from other technology stocks, and they're leading ahead in hopes that China and US will resolve their differences. But in terms of other technology companies like Apple or other companies that are technology based but are not centric on semiconductors, they're actually lagging behind a little bit. They're more in line with consumer discretionary. But because technology has so many chip stocks, it's such a heavy market cap. Honestly, I would prefer to see it as its own sector, and I would put the rest of technology into consumer discretionary, or I would make technology consumer discretionary and chips. But then what I'm doing is creating more sectors, and there's plenty of those if you look at industries instead of sectors. This is a broad view. It's completely fragmented right now. It's like one side is pulling this way and the other side is pulling that way. Until that resolves, we're not going to see a lot of upside. Also, till we get some finality from China and Trump, we're not going to see deep segmentation, which means we're going to see fragmented markets. And when markets are fragmented, they just kind of go all over the place. But it is positive that the Russell now is, for the first time, is leading. Now, here's what would be interesting. What would be interesting is if Trump said there's no deal, everything is off the table, and if the small caps still continued to lead at that point, that would be really remarkable. That would say that the market is starting to assimilate the end of this trade war, even though Trump is not talking about it. And that's technically what should happen. That's what happened in August. I don't know why I've been saying November all this time. It's actually in August. I can't believe it was that long ago. So we should start seeing this on the other way come up here. This happened all before the big news broke out. This happened when it was all just starting. Small caps just quietly started come down, and they never came back up to the highs. Where the S&Ps, if you look at the S&Ps, they came down here. They didn't even do this is let me see here. This is the end of December right here. They started everything a little bit earlier. S&Ps S&Ps were like 2 months later. So they dropped 2 months later and they went all the way up, but the small caps did not. Folks, the small caps is where you want to focus your attention. This has the most direct correlation with China. And I'm really happy to see this little breakout above. Hopefully, it'll remain that way. Lastly, before I let you go, let's look at the bond market. Sorry, I'm talking so much today, but I love doing this stuff. Let's clear this up. Yeah, bonds look like they're going to be the trend is lower right now. The Fed has been lowering rates, meaning bonds should be rallying, and bonds are going down, which means Fed is lowering rates and rates are actually going up because bonds are going down. So the Fed has very little, unless the Fed really pulls a rabbit out of you know where, I'm not expecting bonds to react and possibly just go sideways maybe a little bit more, but the trend in the bonds is now down. The Fed really overstayed their welcome. They should have been a little more cautious and not lower rates at a 50 when stocks were making 52-week highs. I think that was a huge mistake. I think they could have been a little more conservative. Now, I've got some really good news for you. I'm doing a live training tomorrow. I usually announce these things like 2 weeks ahead of time, but not this time. I'm going to give you stocks that just went on the clock. It's a new service that I started. It's called Weekly Profits Countdown. And every week I've got stocks that fit my algorithm and they go on the clock. And these are stocks that are really ready to make a big move. I'm looking at them right now. These stocks are ready to go. I'm going to give away their names and I'm going to review their setups tomorrow. You don't want to miss this. You want to log in tomorrow. You're going to get an email. Don't forget this email. It's important. You're going to get it between 12:30 and 12:45 Eastern time tomorrow. And we start at 1 o'clock sharp. You don't want to miss this. I'm going to give you the names, I'm going to give you the ticker symbols, and I'm going to give you 3 stocks that are on the clock. Typically, this is a premium service where members have to pay a lot of money to get these stocks again, I can't talk today. Typically, members have to pay a lot of money to get these on-the-clock stocks. It's a premium service. But tomorrow, because it's the end of the year, I want to do something really solid for my members. I'm going to give you 3 ticker symbols. I'm going to give you complete instructions, tell you how to trade them, 3 stocks on the clock. Join me tomorrow. Log in at 12:45. Check your email. Keep an eye on your inbox. You're going to get an email right around 12:30, 12:40, 12:45. You're going to get it before 1 p.m. We go live at 1 p.m. Don't miss it. If you guys are liking this video, send me an email, support@marketgeeks.com. Like this channel. And also, I post these videos on the Wealth Press Facebook channel a long time before the market opens. Don't miss tomorrow's training. It's free, no cost. You're going to get not 1, not 2, but you're going to get 3 premium ticker symbols on stocks that just went on the clock. Don't miss out. Talk soon.